Hi guys, welcome to my channel Forex with Temilo. In this video, I'll be talking about how to find intraday trades with stop loss of about 10 pips in the market. Okay, so let's get right into it. In this video, I'll be using Euro USD as a case study. Okay, so when you're looking for intraday trades that you want to get into in a day and be out of the trade that same day. Okay, and when you're looking for intraday setup, you want to focus mainly on the lower time frame from maybe 45 minutes time frame down to like 1 minute time frame. Okay, and you also want to focus on the recent price action. Okay, though keeping in mind your overall structure, you have to have your overall structure in mind, but when you're focusing on the intraday setup, you want to majorly be focusing on the recent price action. So let's take for example on Euro USD. Let's say we right here at this present time, and we are looking for intraday setup. Okay, so at this particular time, I will just have to look at the structure, what we have in place. As you can see, we can see that Euro USD, we took out this low right here. We had this break of structure from this zone, and if we mark out our structure, we can see that this was the last high that we have before we created this last low right here. This was the high that gave us this low. Okay, so but looking at it critically, we can say this was the zone that was responsible for this break of structure. This zone was responsible for this break of structure at this level. So if I was on the chart at this particular time, I'll be looking for sell trades from this zone to fill in this area of imbalance and unmitigated demand zone. Okay, at this level, we'll notice that at this level right here, we'll notice that institutions came into the market at this level, pushing price into this zone, okay, and leaving behind inefficiency in the market. This zone, you can see that there are no bearish candles. Okay, institutions just pumped price up, pushing the market into this level. So when we have inefficiencies like this, market tends to come back and fill up these inefficiencies later on. Okay, so at this point in time, I think I'll be looking for sell trades. Okay, I'm looking for sell, but I will not just get into my sell, because of course we need to wait for confirmation. Okay, now if I had taken a sell from this zone right here, I would have been stopped out because markets pushed above this zone that was responsible for this break of structure. Okay, so this is why confirmation entries come in handy. Okay, so now, since this zone is out of the way now, my next point of interest will be this zone right here. This zone, we can see inefficiency at this level also. There's imbalance at this level, and this unmitigated supply right here as well. So, and also, I will not just want to take a sell from this zone right here into this imbalance field or into this demand zone that needs to be filled up later on. I will not just want to take a sell trade. As you can see, we have just 13 pips as stop loss, which is still okay to take, but I would not want to take an aggressive entry here, because if we look to the left right here, I can see liquidity at this zone, this set of equal highs right here. We have this high, this like some sort of resistance right here that is screaming to me liquidity, liquidity, liquidity. So you don't want to be used as liquidity in the market, because market can push up to grab the liquidity at this zone, taking you out and you losing your trade right here. So at this point in time, I'll be looking for confirmation entry. So to look for confirmation entry before you take your sell trade, we'll be waiting for price to come into this level, give us a break of structure, a minor break of structure, a retracement back, then a sell into this level right here. Okay, so I want to wait for a confirmation, a break of structure right here, and a retracement back into this zone. before taking my sell trade. So this will give me the confirmation I need to go low, and confirmation to take my sell trade down to this level. Okay, so now all we need to do is wait for price to come into this points of interest from the 45 minutes time frame. As you can see, this zone has now been mitigated. Okay, all we need to do now is go to the lower time frame, mark out our structure, wait for a break of structure, look for entry, and take our sell trade. So as you can see from this price action, we have this low, we created this high, we have this low, we created this high, we have this low, we created this high. So I'll be waiting for price to break below this last significant low before I start to look for possible entry to take myself. Now, as you can see, this is our last high that has been created. This is the last high being created, and this is our last low. So I'll be waiting for, before I take my sell trade, I'll be waiting for this low to be broken below before I look for my entry. So let's see if we get a break to the downside. Yeah, as you can see, now we have a break of structure to the downside right here. You can see we have this break of structure. So once we have this break of structure now, all I need to do is look for areas where I can get in for a sell. So at this level right here, we can see this zone right here that was left unmitigated, this supply zone that was left unmitigated. Okay, so at this point I'll be expecting price to push back into this area before I will then look to take sell. Okay, so now I will have my entry at this level right here, and for stop loss, I won't want to have my stop loss at this level. Okay, I always say give yourself some breathing, give your trades breathing room. Okay, breathing space. Okay, so I would like to take my stop loss to this level right here, to the last significant high, because as you can see, this high was responsible for this push to the downside right here. Okay, so now this will be my stop loss area, and this will be my entry. So for my take profit, it will be that zone from the 45 minutes time frame that we had marked out. So now let's move back to the 45 minutes time frame now. What's happening? So the 45 minutes time frame now, I'll be looking to take my profits at this imbalance field right here. Okay, so and this, so let's head back to the 5 minutes time frame now. On the 5 minutes time frame, looking at the price action as well, we can see that we have this kind of trend line support right here. Also, this area are zones of liquidity, price bouncing up from this trend line. So these are confirmations, extra confirmations telling me that price will likely push down, grab this liquidity, and come fill the imbalance on the 45 minutes time frame. Okay, so now let's play. So yeah, so we got tapped into this trade right here, and let me speed this up. So we got tapped in. Let's move, and the market came back another time to this same zone again, mitigating this area, and the market cleared out this liquidity right here, and our 45 minutes imbalance and demand zone was mitigated, and price even went way beyond our take profit. But it's best to get out of the trade at points of interest like this, at zones like this, because you never can say price may use this zone right here. This price may decide to use this demand zone right here and mitigate the zone at this level and push back up. Okay, so you don't want to lose your profit. Always pay yourself and take profit. Okay, there will be more opportunities another time. Okay, so now, and this was about 80 pips, just with a stop loss of about 9.6 pips. So this is how to get a stop loss of about 10 pips in the market. Okay, so you don't have to have big stop loss of about 30 pips, 20 pips, thereabouts. You can wait for confirmation entries like this to get 10 pips stop loss. When you're having a small stop loss, it allows you the room to use higher lot sizes. Okay, for example, now if, because I have this about 10 pips stop loss, if I'm using a standard lot, a one lot size, my risk would be small compared to when I have, maybe if I'm getting into the trade at this level right here with stop loss of about maybe 20 pips thereabout. I will not, okay, if I'm planning on risking maybe $100 on a particular trade, for example, and my stop loss is about okay, on this trade right here, my stop loss is about 10 pips. So if I'm using one lot size on this trade, I'll be risking just $100. Okay, and I'll be able to use one lot size. But if I'm taking a trade from here and my stop loss is about, say, 20 pips thereabout, and I want to risk just $100 on my trade, I will not be able to use that one lot size again. I will just be able to use 0.50 lot size. Okay, I'll be able to use 0.50 lot size, and my profits will be less than what I would get using a smaller stop loss from this trade right here. Okay, so these are the benefit of waiting for confirmation entries. Okay, so you tend to have a higher risk to reward and get to use higher lot size because your stop loss is small compared to when you have bigger stop loss and you have to use smaller lot size. So at the end of the day, always make sure you know the amount you want to risk in per trade. Okay, so thank you guys for watching to the end. I hope this video was of value to you, and if it is, kindly subscribe to my channel if you're yet to do so, and please like my videos. And I have other videos that you can also check out on my channel as well. And that will be all for this video. Bye.